Hello everyone. In today's topic, we are going to discuss how to generate a monthly income of 1% with a covered call strategy. So generally, why do retail investors like us come and invest in the stock market? I've seen some people have a very high expectations, like they all go and invest money into the penny stocks, or they do trading in futures and options without hedging their positions properly, as they want to become rich very soon, but finally ending up losing their entire capital of money. So if someone is expecting a 50% or a 100% return in a year, then this video is not meant for them. So if anyone who is watching the video has an expectation of getting a return of 12 to 15% of their investment, then this video is for you. So why covered call? When do we use covered call? Uh, let's use this as an example. Let's say you have invested in a very good blue chip stock like Reliance as a long-term investment, but the stock is consolidating within the same range for months or for years. If you can see, I'll show you the last how it performed, Reliance, how it performed in the last 1 year. If you see the Reliance Industries, if you see last 1 year how it performed, Uh, so let's assume that you have invested in the Reliance last year at this time, which is 22nd of October 2021. Let's see how much it was trading. Last year around 2021, it is trading around a range of 2,750. But if you can see right now, it is trading around 2,470. So which means basically the Reliance is trying to consolidate between the range 2,750 and 2,200 for almost an year. In case like, do you think a foreign investors will invest in a stock where it is giving a negative return? The answer is no. If you go and see the uh, shareholding pattern of Reliance in the screener.in, 25% of the stocks has been held by a foreign investors here. But will they wait for a stock to break out after 5 years? If you see how Reliance has performed between the years 2007 to 17, the stock was almost, if you can see it, the stock was almost 2007, which is nothing but around here, 2007 to 2017, which is almost trading at the same range of 500 rupees. But it is almost trading for the same range for almost 10 years, and then it gave a breakout. It's a very good breakout. But in this case, in case if your stock is consolidating or is trading in a sideways for a long time, you can make money out of it with a covered call strategy. So how to do a covered call? Let's discuss into the video. So to do a covered call, you must first invest the money into the stock market for the stocks. Let's say take any very good blue chip stock. Let's take TCS as an example. It is always best to invest only in blue chip stocks because they are a safer bet. So either go for a long in cash market or in futures. Cash segment in the sense you should have the stocks almost equal to the lot size. So let's see how much is the lot size of TCS stock. If we go and see, so TCS, I'm seeing how much is the lot size of TCS for November future. If you see, the lot size is almost 150, which will be, in case if you're buy it in the cash segment, which will be around 4.5 lakhs in today's worth. That's because we are going to sell a call option, so it is must to buy an amount equal to the futures and options contract size. So here the lot size is 150. So whenever you choose, so and then what is the next step? So once you bought the stock in cash segment on futures, then you will have to sell far out of the money call options. Like let's say, let's see this in the Opstra website, like how much it will be a loss and how much is your break even. Let's assume that you bought a TCS future contract. Uh, I'll show you how to do it, how to see. So you bought a TCS futures for a November month. So generally you should need a 1 month. This month is almost going to end, this month expiry. So I have choose this November month as an expiry here. And then I'm going for a long and futures in TCS market and I'm adding a position here. If you see, I bought it. So let's say you can even do this in the cash segment. In case if you're doing in a cash segment, you need around 4.5 lakhs. Let's say it is trading at around 3,150 one stock price and into 150 as a lot size. You should have 150 stock price in case if you're buying in a cash segment, which is roughly around 4.75 lakhs. And then what's the next step? So now you went for a long in the futures or in the cash segment. So now you should sell a far out of the money call option. Let's say we are selecting options for the next month, and then we are trying to uh, sell at around 3300 call option. Let me add a position. So we are supposed to sell it here because it's a option selling strategy covered call. I am adding a position here. So if you see how much will be your profit and how much money, how much rental income that you want to get, let's see it. See, let's say you bought a TCS for 3150 rupees. Okay, so it should be around into 150 stocks, which is around 4.5 lakhs. In case if you are buying in the future, it was around how much? It is around 1 lakh rupees, just 1 lakh rupees. So in case if you bought it and you sold the 3300 call option, which you collected a premium of around 10 rupees 95 paise. If you see here, okay, sorry, it is 24.95. So you collected around 24.95. So 24.95, you've collected a premium into number of stocks, which is 150 here. So 3750 rupees, closer to 3750 rupees as a profit. In case if TCS at the end of the expiry day, it is not crossing 3300, it is expires less than 3300. Then which means this money 3750, the premium which you have collected is for free, which is a rental income here. If you see 3750 is almost closer to 0.8% to 0.9% per month, which in case on a year basis it will be around 10% per annum. In case if the VIX is more, you will be able to get even more premium than this. Uh, let's say like when will you start making a loss over here? Let's say on the 24th of November, which is the expiry day that we have chosen. 24th November. Let's say the TCS is trading at around 3,400 on the expiry day, but we sold a call option for 3,300. So which means once once it crosses 3,300, we will start making a loss over here. If you see, it is trading at around 3,400, and you sold a call option of 3,300, which means you lost 100 points here. 100 points is your loss. So 100 points for each stock into 150 stocks is equal to 15,000 rupees loss that you want to make it in the call option that you have sold. In case if it expires at 3,400, but the underlying, which means that either a TCS stock which you bought in cash segment or the one which you went for a long in futures market. So that you bought it around 3,150. So currently it is trading at around 3,400 minus the current price, the price at which you bought. So which is almost like you captured a 250 points as a profit here in the underlying, so which is into number of stocks, 150 stocks that you're holding, which is around you made a profit of 37,500 rupees profit in the underlying, which is a TCS here. So what is the final profit that you want to make it over here? So 336 7,500 that you made it in the TCS stock minus 15,000 loss that you made it in the call option, sold the call option. So here your profit will be around 20. So if you see, it is almost 22,500, which is closer to 5% that you can make in case of cash segment. If it is future contract, it will be even more than that. It is closer to 10%. So in case if you're able to get 5% or 10% in 1 month, I would suggest to book the profit, book both the underlying as well as call option, and you can come out of it with a very good return. The return, if it is 10% in case of future market, that is a target for 1 year. We got it in a month, so it's better to book the whole profit and come out of it. So that's all about it. So I'll show you like what I have done for TCS. So I've given a TCS as an example. So I'm also doing the same, the covered call. I've tried it for this month. I'll show you what I have done. Let me go to my broker, the 5paisa broker that I'm using here. So I'll show my positions. If you see, I am holding a TCS stock worth of 4.71 lakhs. I have bought a TCS stock in a cash segment. 150 shares. I bought it around 3,137 rupees. No, I mean this is the current price. Sorry, I bought it around 3,092 or something, and right now I am in a very good profit. As well as I have done a covered call for this. If you can see my positions, um, if you can see here TCS for the same thing which I have shown you, I sold a call option of 3,300 rupees, and I've collected a premium of around 36 rupees. So what will be my profit in case if TCS doesn't cross 3,300 rupees? My profit will be around 5,400 rupees, which I'm collecting as a rental income in case if it ends less than 3300. So it is already I made around 1545 in just 2 3 days. That's because TCS is consolidating the same range for almost last 2 3 trading sessions. And in case if it goes above 3300, I'll get a profit. So I bought it around 3092. If it goes above 300, I will be able to make a profit of 209 points. uh, as an example that I have shown you, it's kind of same. So 209 points, 209 into 150. Sorry, there is a lag. Which will be around 31,000 I'll be making within a month. In case if TCS crosses 3,300, I'll be booking it and I'll come out of it. In case if it doesn't go beyond 3,300, then my profit will be 5,400, which is a rental income that I have collected over here. uh, so that is my profit over here. So this you can do it for any other stock like HDFC or HDFC Reliance or any other blue chip stocks. So this strategy can be used by anyone who is willing to hold any good blue chip stock for long term and wants to make a regular monthly income. Then they can use this strategy. Disclaimer: I'm not a SEBI registered advisor. Anyone who wishes to trade should do so at their own risk. And before investing in anything, please consult your financial advisor. If you have liked the content, please do like it and subscribe it. Thank you so much for watching the video.